180 odd points gain. Aditya Sood is with us, fund manager at InCred Asset Management. Aditya, always a pleasure to have you on the program back in Closing Bell. And we've discussed a bunch of things that you own and have liked in the market. So I want to just start with a broader sort of question to you in terms of what you've been doing since the last we spoke, Aditya. Anything you've added, anything you've sold, any action at all?
So I think so the context of the market has completely taken a U-turn, essentially because if you think about markets today, we have not seen risk-free rate coming down or collapsing. The second point is that the risk premia of India within the emerging markets obviously has collapsed, and that is getting reflected in the bond yield differential between India and US. The third point is that, money is moving out of US. Now, if you look at markets, YTD, the best performing markets are in Europe, possibly. We all know what is happening with the Tel Aviv Stock Exchange also. The market itself is up, 30% YTD. So our belief is that, this is a perfect recipe for PE multiple expansion going forward. And it is going to be only a function of, how earnings growth gets delivered. Last 7-8 quarters, we have seen a lot of disappointment, particularly in terms of, earnings getting cut in mid and small caps versus large caps. I think so we are very close to that cycle playing out. So two-pronged approach as far as we are concerned, we are looking at, stocks which possibly have corrected by 30, 40, 50% from peak prices. Not necessarily new ones, the stocks that we already own. For example, Tejas has corrected by close to 50% from the recent high that they made. Newled had corrected, very, very sharply. So did, Indraprastha Medical close to, sort of a 30% knock in each of these names. These are our top holdings essentially. So that is one focus area in terms of, sizing these companies well. The second focus area is that, wherever we get earnings growth and multiple year of visibility, I think so Intellect Design Arena, the stock has obviously done well. So we have added as the stock was doing well. Our belief is that going forward, the AI initiative can take this company, to a different level. We have seen breakout in terms of, margin trajectory from 21% to 26% very recently for this company. So our belief is that, it is more going to be a market wherein concentrated portfolios do well. The context of the market has completely changed because from 2001 to 24, we saw 25% earnings growth. Going forward, earnings growth itself is going to be very, very tepid. So if you can construct a portfolio wherein earnings growth is 18 to 20%, and this is what we have precisely done with very minimal risk to earnings, which is 2x of the market earnings growth at a reasonable valuation. I think so we'll be better off in terms of, returns going forward.
All right. Hi, Aditya. Good afternoon and good to see you, Ben. What about Religare Enterprises? That's another one that you'll have, I think, close to 4.5% weight. That's the turnaround story. You have a new promoter that's coming in there. Lots of those litigation issues have gone behind. What is the call on the stock from here on? Is it an add at current levels as well? Because I think at its height was 280 to 90 bucks. Now it's around 220.
So I think so corporate change events, take a lot of time to play out. We have not seen an appointment of a CEO till now. I think so that is one trigger. Care getting listed at some point in time, Care Health getting listed is another trigger. I think so there is a lot of optionality in terms of the broking business that they already have, in the sense that they at some point in time can do wealth management. Religare, by the way, used to have a wealth management, very successful wealth management practice with Macquarie at some point in time. So our view is that, there is very, very little or minimal downside essentially in this name because Care gets traded in the unlisted market. They own 63% of Care. And at some point in time, Care would require capital. So our view is that, there are enough catalysts which are around the corner in this name.
That offer is done now? or that offer is, that open offer is on, Aditya? I lost track. The Burman's offer.
Yeah, so that is done.
That is all done. Okay. Okay. Basically, it's back at those levels now, right? I mean, I think 230, 240 was the offer price. It's come off now. So to about 223 or so. I think another one that we've discussed, I think last time also, was Tejas Networks under 700, Aditya. This kind of is also a business which feeds into a lot of other industries which are doing well, and all of them. Is this a function of how well it's done in the past, which is leading to a bit of an issue here? So time just correcting?
I think so. It is more of a order visibility issue at this juncture. But our take on the company is that, last year they have done $80 million in terms of R&D spend. Just think about it. How many companies have got this capability of doing a R&D spend, which is purely focused on R&D in terms of, $80 million number? It is more like a $360 million number globally, because in India, our R&D is like 1/4 of the global cost. So that is point number one. Point number two is that, we believe that the NEC tie-up for them is a game changer. In the BSNL contract of, these 1 lakh towers, which has now been extended to 1,18,000 towers, possibly, there is another talk that, possibly it could be, extended to 2 lakh towers because it has been a very, very successful rollout and BSNL is now profitable. We have seen, 260 and 250 crores of PAT flowing through BSNL. So for 2 quarters in a row, they have been profitable. So that is one opportunity. Our view is that this NEC partnership is a two-way partnership. They would be paying a $60 million royalty to NEC of Japan. But more importantly, the go-to-market completely changes in the sense that the core network of NEC is being used by Docomo in Japan, which has got 22 million subscribers. So if you look at, going forward, Tejas can supply the RAN to NEC customers in Europe, in Southeast Asia, in Japan. So our view is that, the TAM is expanding at a very, very rapid pace. The only visibility that the market requires here is order inflow. And I think so, just think about it, that a company, which was doing 550 crore of top line is now a 9,000 crore revenue company. The kind of bandwidth that it takes, to transform this company meaningfully. If I look at the TAM of the other players in this industry, Huawei is a $120 billion telecom networking equipment giant, and Ericsson and Nokia combined itself is like a $60 billion number. So if Tejas, sort of has to have or even target a 3-5% global market share over the next 3, 5, 10 years, they would have to scale up very, very fast. And that is why they are very aggressively, spending into R&D.
Okay, all right. Interesting times for the stock, Aditya, because the others have got that BharatNet orders. We've been hearing, I think, Sterlite and Polycab, I guess. So their time will be due is what you believe. Is that correct?
The system integrators, Tejas, safe to assume that Tejas has tied up with, enough and more system integrators. So it is only a question of time wherein they get the BharatNet order. BharatNet obviously is going to be a 6,000 to 8,000 crore opportunity. It is very well known. BSNL is an added on opportunity, which is equivalent to 7,500, even if I have to extrapolate 1 lakh towers going to 2 lakh towers. And then there is an element of, BSNL also rolling out 5G in due course in 2-3 year period. And then there is a railway coverage opportunity of 1,000 crore. Now, if you do the maths, everything put together is a 16 to 20,000 crore opportunity for Tejas. The good thing is that there is no competition per se here. So it is pretty much, it is a question of time, when the orders flow in and when they are in a position to execute. But what they have demonstrated clearly is that they were supposed to be executing this in FY26 to 27, the 1 lakh initial towers for BSNL. They have clearly executed, ahead of time.
Okay, all right, great. Thanks a lot, Aditya, for joining in. We'll keep an eye on some of these stocks. Some of them brave calls out there. You're seeing some of these stocks have come off the top, But actually, according to Aditya, they're providing good entry opportunities as well. Intellect Design, we discussed, Tejas Networks, and I think Indra Plus Medical, that was the other one we spoke about. Well, for the time being, we slip